On this episode, I'm super excited to have Ken Ko back on the show. We're going to talk about all the work that Mercy Corps Ventures is doing today to fund the founders that are leveraging crypto and AI to increase financial resilience globally. I'm Jarrett Carpenter, and this is Future Signal. Ken, welcome back. How are you?
It's good. It's nice to be here again. Good to see you, Jarrett.
I say welcome back because this is now your third time. Per what I can see on Spotify, your third time now on the podcast. You came on, and let me just check that, I think in May of 2023, and then you came on January of this year, which feels both 10 years ago and also 5 minutes ago, because that's the world we live in. And now you're back on today. And on the previous two episodes, we really focused on, the first one was like blockchain. Let's look at blockchain as a technology. The second one was crypto. Let's look at crypto. And we were talking about some of the financing that you offer entrepreneurs and how you're going to, fund them globally when they're using. Today, coming on to talk about the other massive elephant in the room, which is AI. So, are you ready to dive into AI?
Yeah, let's go.
Okay, let's go. Let's just start with the fund. And I took a bunch of notes here on the fund that you guys have. So, I'm going to read this out, and then from there, hopefully I'll give you enough to then move forward with the question. But it says Mercy Corps Ventures AI for Financial Resilience Initiative leverages AI, blockchain, and emerging technologies to close financial service gaps for unbanked, underbanked, and climate vulnerable populations in emerging markets, primarily in sub-Saharan Africa, Latin America, and Asia. The initiative pilots and scales solutions such as AI-driven insurance, parametric credit, savings via bond tokenization, and anticipatory cash transfers and remittances, aiming to improve financial access, economic resilience, and trust in digital finance. Okay, that was a word salad. Can you now tell me what that all means in more layman's terms?
Yeah, so this is a new initiative that we're running. This is actually good timing that we're speaking. We have a webinar that's going to be a live webinar the same day that this goes live, so Tuesday the 18th. So feel free to jump in if you'd like to learn more about what exactly our team's doing there. But we what we're trying to understand is like what are some of these really powerful use cases where AI can help bridge the financial inclusion gap. So you've got 1.4 billion people in the world who are unbanked, and this number has gone down steadily over the years. You've got different innovations that have driven meaningful leaps in financial inclusion. Like the big one, obviously, is mobile money, where people are able to have effectively bank accounts without ever going to a bank, just on the convenience of their own smartphone or their feature phone even. And then I think crypto in some ways has helped to enable financial inclusion. I think in some ways it's also made things a bit worse, but in other ways it has been somewhat beneficial in some of the use cases that you mentioned. And now I think AI, just given obviously all the hype and bounds that AI has taken over the past 2-3 years, it's become clear that there should be some sort of spill down towards emerging markets and to people who are unbanked. And so what we're really hoping to find and see with this call for proposals is we want to identify really promising initiatives and innovations that will help to boost people's access to financial inclusion, meaning like education, digital literacy, financial training, but then also from a usage and utilization standpoint, right? So it's not just about having this product and making it exist and having people be aware of it, but also just like increasing the actual retention or like activity of those products. So whether it's a payments product or a savings product or an insurance product, like making sure that people are engaging with these regularly, that there's some stickiness to them. And I think in many ways AI can help with that. And so that's really just, high level what we're trying to find and see with this initiative.
I'm really excited for this, and the timing, I didn't know about the webinar, and I may even hop in on that and just kind of be in the background. So I'll leave that webinar link in the episode show notes. This is coming out on Tuesday, the 18th of November. You mentioned something there that I want to touch upon. You said there's been good things from crypto and then maybe not, and then also like bad things from crypto. In your work, has there been something that you guys have launched and you're like, oh yeah, this is going to work, absolutely going to work, how could this not work? And then really blew up and maybe took 2 steps back after the 1 step forward with crypto?
So when we are launching and designing these initiatives, I'd say we're extremely careful, probably bordering on like overly careful to avoid such risks. And that's part of because, we work in very sensitive and vulnerable contexts, and we don't obviously want to put, for example, like if we're working with, say, an unemployed person in Uganda, we don't want to risk any of their savings or any of their financial disposition because it's just um, a huge burden. And so there's a responsibility that we take when we set up these initiatives that we would not want to do. We want to do no harm. We want to reduce any sort of risk directly to the end user. So I think as a result, like we probably aren't really doing things where it's like it's going to blow up because it just by nature of how we've been selecting these sorts of projects, it makes it a bit harder to actually end up in those sorts of situations. But I would say that when there are always, of course, lessons learned or challenges when we're doing these sorts of initiatives. Um, and I think more so, those challenges are it's not on the tech side, it's more on the human side, right? It's more like we have a humanitarian lab where we've been testing out stablecoins and sending those to really challenging contexts like Myanmar, Sudan, Syria, Afghanistan, like countries that are embroiled in civil wars for years up to decades. And so you're talking about countries where there's just very minimal financial infrastructure in place. Um, and the financial institutions and telcos are just like they've been captured by like the ruling juntas or whoever else is in charge, right? Um, and when we work in places like that, like we're obviously designing things very carefully. But I think the challenge also is that when you're trying to send money into those places, there are a lot of ways where it could go wrong. Just because you need to go through different intermediaries, you go through different systems, and often it does go wrong. And then when you're also introducing new technology like stablecoins, it's about training, it's about bringing new people on board, introducing new systems, integrating new partners. And I think that's where you actually have a lot of these things where it's like, well, like on paper, it sounds like a really cool idea and it makes a lot of sense, right? Like stablecoins are going to, like, you can send the money faster and cheaper. Like, why would you not want to do it? And then you could probably set up a transparency dashboard so then anyone can see those funds flowing. So, I mean, like on paper, it makes a lot of sense. But then when you factor in like the actual human element of it, which is like you need to onboard people, you need to get people like understanding how this technology works and how to integrate like the implementers, if not even the end users, just like the implementers, so they know how to use the technology. Like that's when a lot of things go wrong, and that's when it could potentially blow up.
It's interesting you mentioned stablecoins. The previous episode we had on Kevin, who runs borderless.xyz, which probably a connection to you guys. If you're not already aware, you probably should have that connection with Kevin. He is very much up to date on, global problems, really just focusing on like on and off ramp situations. And I think that that's always difficult because that's where you then get into the human element. And I jumped into crypto and I kind of want to get to crypto later. So let's go back to AI. I know that that's a shift back to, but AI retail wise really happened in November of 2022 when I think it's like a singularity moment when ChatGPT was like, oh, OpenAI was like, here's this thing called ChatGPT, go check it out. That is now almost 3 years old, actually, almost to the day. I think that was the end of November. So we're about 3 years into that. When you say, let's use AI for financial inclusion, what are things that are currently being used right now, probably maybe in the portfolio that you guys manage, or maybe some other things that you're seeing where people are using AI really, really well and they're leveraging the tool to be able to increase financial inclusion?
I mean, one use case that's been around for quite a few years is around AI-driven credit scoring. And so, like, and I used to work at a startup that was doing this, 2018, and so it's not like a new use case by any means, but it's about these like these earlier stage machine learning models before LLMs existed, but allowing you to say yes to people who had historically been excluded. So like you don't have any credit history. A bank has never been willing to lend to you. It creates a vicious cycle where the next bank doesn't want to lend to you either because you don't have anything to base a decision off of. Um, but when you use alternative data and then have actual like machine learning algorithms that can crunch that in a efficient way to the point where you don't really need human intervention or minimal human intervention, you can at scale serve people and give them access to credit. So I think that's like one of the older use cases that's been around. Um, and not to say that it's not useful, but clearly it's been one that has helped to increase financial inclusion around different parts of the world where there's less access to credit. And I think that's probably like broader what you're seeing, right? Is it's just like a decision engine. We're seeing some stuff nowadays where it's integrating climate data with financial services. And so you take like advanced climate analytics. Let's say you're crunching um, a bunch of data that tells you that you're going to have an extreme weather event soon enough, right? And so that AI can proactively identify that, and then integrating that with financial services, um, you can offer someone a type of financial product to cover for that, whether that is insurance, whether that is a line of credit, so that they can get ahead of these future costs, or invest in something that will boost their resilience. Or in the case of humanitarian aid, you could send an aid payment to someone before the climate disaster strikes. So I think you see a lot of integration with climate data, Earth observation data that will allow you to boost financial inclusion once you're using these decision engines.
I said let's go back to talk about AI, but with what you just said, it reminds me of a conversation we had on the first episode. Back even in May of 2023, we were like, hey, there are ways now using smart contracts to be able to get farmers paid in the event that their crops are going to be wiped out from the insurance company. Is what you're saying basically AI is now like you can't really separate from AI from crypto when you really look at it holistically because of the way that AI is kind of working as like the oracle to give you the information, but the end execution on the financial side, is that the blockchain? Is that what you're saying? And like I said, maybe we shouldn't be separating one from the other.
Well, it's different. It's similar. Obviously, they work hand in hand. It's different pieces of the same stack, though, right? Like if you think about a lot of to the use case that you were talking about, which is anticipatory action. Um, we've had the intelligence, or let's say the compute, to be able to determine climate disasters pretty well in advance for quite some years, right? Like I think it's around 55% of climate disasters you can identify up to 7 days in advance. Um, and that's only going to be higher, right? Because as we get better at crunching data, identifying microclimates and all those sorts of things, we're going to get better and better at saying, something's going to happen here, go respond to it. The challenge has always been actually getting money out there, right? Like getting money from the US or Europe to rural Somalia is really slow and really expensive. And so that's where the integration with blockchain and stablecoins is so powerful. And so I think that's when you see, like, when you combine those sorts of technologies together, it becomes really sensible, or it becomes like a sensible use case, because now you're actually finding like there's a problem to be solved, right? How do you get money out there quickly? You have a decision engine that can identify things super rapidly and super precisely, and then you need to figure out, okay, how are the rails? What are the financial rails for this to unlock liquidity quickly? And that's where crypto comes in. So I think that's where you see a lot of these, like, if you were to abstract this away and set it as like a formula, I guess it's like that, right? It's like AI is helping you make decisions rapidly, and then crypto is helping you make, like, it's the financial rails that allow you to act on that rapidly. And so I think obviously you switch the context, you switch the problem slightly, but ultimately it is answering a very similar type of problem that people everywhere are facing.
Totally makes 1,000% sense. In that saying that, are you expecting that most of the AI, and when I was looking at the AI proposal page, and I'll put that link also in the episode description, so if people are out there and they're building using AI, please go ahead, check that out, apply. There is mention of blockchain. It's like, how are you using AI and other technologies like blockchain, et cetera, to be able to increase financial inclusion? One of the phrases on that page that I wanted to ask you about was, and I put it in quotes, deployed responsibly. Why did you guys add that? And I know, I mean, maybe it's obvious, right? Like people can use AI to do nefarious things. We have an entire company. I don't even know if it's worth trillions of dollars, but it feels like it's worth trillions of dollars in Palantir stateside that I think you could question whether their intentions are good for humanity. So is that what you mean by like deployed responsibly? Like you're not trying to create like a Skynet? Like what are you getting at in that? I just found that when I was reading it, it felt kind of like we're putting guardrails, and if so, why?
I think the AI debate has been ongoing for the past few years around, like, how are you training these models? How is this data being used? Um, how are you respecting people's rights? Um, what's the black box around? Like how are these decisions being made? Um, I feel like that narrative has not been really resolved. It's probably just been pushed to the side as the accelerationists win, and we keep on just talking about growth at all costs. And so I think for us, like when we talk about emerging market users, where people have on average less data literacy, less financial literacy, um, being responsible and doing no harm are extremely important preconditions to the work that we want to do. You very well could be using AI, and you could build I don't know, like a payments app that is linked to promoting gambling or something like that, right? I mean, you very well could do that. And in fact, I've spoken with many people who are trying to do something like that. Um, and it's just not something that we don't want to be in that game, right? Like we don't want to be encouraging this sort of behavior because we want to be productive. We want to support people to build better livelihoods and not doing things that are going to put people in worse off positions. And so I think that's more so just the intentionality behind it. And when we do select our investments, our partners that we work with, um, the first screen is around impact, right? The screen is around like how do we feel that these companies or these proposals are going to actually improve people's livelihoods, and to what depth, and how are they going to be reached? It is core to the work, and so it's just important to filter out anyone who might feel otherwise and just is purely trying to maximize profit.
Yeah, I just had to ask that. I feel like we are in a world right now where there are these technologies, crypto and AI, and you can use them to do a lot of different things. And it's easy to get into a situation where you're maybe extracting someone's personal data because at the end of the day, that's the bottom line, and you're going to be able to then use that to leverage for something else. And so I'm glad that you guys had that, but it felt it having deployed responsibly in that one page was kind of felt like the grandma at the beach saying, "Hey, maybe don't go in the waves. You're only 3 years old," type thing, because it can be dangerous. Selection criteria. Wanted to dive into that next, and so you just talked about you have impact first, innovation edge, and sustainability. In innovation edge, it says, "What signal would this send to the wider ecosystem?" What are you looking like? I know you're probably still getting proposals right now, but what are some signals you would hope to be able to send through the funding of a project? What's one that you personally are like, this would be great for the ecosystem to kind of see?
One thing that we spend a lot of time looking at is like the intersection of financial and climate resilience. And so, what I was mentioning earlier around how these tools can help with better decision engines um, for making climate related decisions. I think if you go across a lot of these markets, like it's hard to have any sort of financial resilience if you don't have climate resilience, and vice versa, right? And so I think seeing solutions or proposals where you're seeing deep integration between these two, I think is going to be really compelling. It's going to show like the next type of use cases that will be powerful for driving both types of resilience. And so that's where a lot of actually our thesis is based around with inclusive climate fintech, because it is just like this understanding that um, if you're not making climate smart products, um, there's it's very easy to become obsolete, especially in these sorts of markets where you've got 3 billion people who are vulnerable to the effects of climate change. So that's almost half the world's population, disproportionately in emerging markets. And so just anyone who's able to build something that deeply ties those together is going to be well positioned for success.
I love that. And I know that in every conversation we've had, the climate resilience piece seems to come up organically. It's always in the background. The next one is sustainability. And it says, what is the business model? And it's basically looking at like, is this thing going to survive? But there's two parts here, and it builds on the climate resilience. And I feel like this is where a lot of the pushback is around climate from maybe the private sector or even the public sector now, because now I think we're in a shift away, especially in the US context, of companies that are now investing in green solutions and having any even climate nomenclature on their websites. And so how are you guys looking? Obviously it needs to have the good business side, the good MRR, the good ARR. But on the climate side, when it comes to AI, a lot of people look at AI and they're like, hey man, these data centers, come on, what are we doing? A lot of them are fossil fuel powered. How do you manage conversations like that, especially if it comes to like investors asking you about, said portfolio company or said company that you're looking to fund? So basically balancing the P&L and the profit driven side of this, that like, yes, we need these things to be self-sustainable, but also, are there situations where maybe you've seen proposals, or could you imagine a situation where the proposal comes across and because of the AI's energy intensive nature, I'll say, it outbalances the profit side.
I think at the scale that the partners that we're operating, that we're working with are operating at, I don't foresee that being an issue. I can certainly imagine like, when that becomes a problem. Um, and I don't follow the AI build out too much in the US, but there is at least a lot of like renewable energy that's coming on grid right now. I know the US just approved development of its first like nuclear facilities in quite some time. And so I think there is at least an awareness that um, obviously more power needs to come to the grid, and a lot of that's being done in a more renewable way, which is, of course, good. Um, so yeah, but I don't think generally for us at least it would have a major implication to the partners that we work with.
Okay, perfect. I just had to get that question in. The AI conversation in the United States is one very much of like, I have my phone open and I have ChatGPT, or I could just put it in an old Google search, and people are now literally thinking about the water cost, right, of that. And so I myself am always like, oh, do I really need ChatGPT for this, or really need a LLM behind this, or can I just ask Google, which has a much different, the data centers in the back just are using different resources. So let's now shift, because I want to talk about stablecoins, and I think stablecoins for me there's two big narratives in blockchain for me that I think have won out over the last 5 to 10 years as far as like overall global success. And one of them is Bitcoin, one of them is stablecoins. And so for stablecoins, let's talk about what you guys were doing in Syria. And I think it's Hesab Pay. Can you talk a little bit about that project and where it is today and where it's going?
Yeah, happy to. So we've been running some stablecoin work in Syria for the past, I guess, maybe year or so. Syria, as you know, I'm sure most people are aware, it's been in a horrible civil war for close to about 15 years now, and under just a brutal dictator. And when that sort of stuff happens, obviously a lot of sanctions happen, a lot of financing regulations come in, bank de-risking. As a result, it just becomes extremely difficult for anyone to get money into the country and to get work done. So humanitarian organizations have been there and have been trying to support the people who've been affected by this horrible crisis. But it's just a struggle to actually get liquidity, right? Like you're often going to neighboring countries and trying to access capital from there. Uh, I know that, for example, like the central bank of Iraq is a major source of liquidity for organizations that are trying to support in Syria right now. You go to Iraq, you get a bit of US dollars, and then you bring it back and you use that to pay staff, you use it to fund transfers and things like that. But even with that, there's always liquidity restrictions because it's not like the central bank of Iraq is sitting on infinite piles of US dollars. Um, so yeah, as a result, this is a country that's been largely cut off from the international financial system for over a decade. Um, we've been working in the northeast part of the country, working with farmers and just generally trying to help them improve their livelihoods, improve access to financial tools. And what we tested out with this initiative was whether using stablecoins would be a way to send money faster, safer. I mean, the typical stuff of what you'd expect, and then obviously the liquidity benefits of actually getting money into the country without having to jump through a million hoops. And we worked with a local partner called Hesab Pay, and they were providing the support with the digital wallet, the digital infrastructure, and then also with the off ramping as well. So money would be sent from our treasury and then directly to our country office, to their digital wallet, and then that money would be distributed to the digital wallets of the smallholder farmers. Um, and so they would then have this in their mobile phone, and then they could use that at various vendor locations that were participating, and then the vendors could cash out with the Hesab Pay network to local fiat. So that was the loop of how the funding was flowing. I mean, as you'd expect, it's like the sort of results that you'd anticipate when you use stablecoin technologies, right? So like 60% reduction in transaction costs compared to traditional transfers, 96% reduction in time in payments compared to traditional transfers. For anyone who knows stablecoins, this is not surprising, right? Some of the data that I thought was actually particularly interesting from the result from the N-line reports that we were conducting. So a lot of us had this hypothesis that people preferred cash in these places, right? Because they're used to cash. Cash is viewed as being perhaps like more real because it's tangible, especially in these countries where you have lower levels of digital literacy or digital familiarity. Um, but actually, what we found was that like more than half the people preferred receiving money with digital payments instead of cash. So 62% preferred that because they found it easier and safer, and 72% actually prefer to receive aid via digital means rather than cash in the future. Um, so you're seeing a shift in behavior, and I think people are also recognizing the benefits of getting money in non-cash because there's just a safety component as well, right? Where you have a lot of these countries have underground networks, gangs, and so walking around with your monthly aid disbursement of cash in an envelope, it puts a target on your back. But if you are in the safety of your home and you immediately get the top up into your wallet, then it becomes you have more flexibility, you have more perceived safety with that as well. So that was one of the more surprising outcomes that we saw when we concluded this study.
I remember years ago with conditional cash transfers in Guatemala that was always a struggle because it was like people would line up, everyone in the community could watch these people line up, then they leave, and then they're cash strapped. And it
Yeah,
was like, if you're looking to rob someone, there you go, you
yeah,
know?
yeah. You put a
So
target on your back, right?
yeah, and I actually, what's the do you have the numbers? And maybe you don't, because this is like another level. Do you have the numbers and the demographics? Because I'm interested to know: is that Gen Z? Is that millennials? Is that Gen X? Is it Boomer? Like, who are the people that are now feeling more comfortable with digital as opposed to the physical when it comes to cash?
Good question. These are it's going to households. So, it's
Okay,
like the head of
okay.
the household. So it's not like a Gen Z, but it's probably someone in their 30s and 40s. So grown up with some level of technology. But yeah, we were saying I'm just trying to look through some of the data that we have here. It does seem like yeah, without going to specifics, they were trending slightly older. So we have people anywhere from like 30 to 50 in this study that we published around the work.
Okay, yeah, I love that because I think the narrative, right? The story in my head would be like, oh, Gen Z is going to be so much more into the digital. But I think also contextually, if I'm in a country like Syria that has had a lot of violence, that has been war torn, even if I'm 50 or 60 years old, I could see the super value in just being able to keep something on my cell phone that wouldn't also call attention if there are people looking around in a desperate situation, right, to take advantage of that. So let's we don't have too much time, and part of that is on me. So I will take all the blame before we actually press record. I was talking your ear off about the world, and we were talking about other things. But with the last little bit of time, I wanted to also call out the other project that it looks like you are doing in Africa, and I think it's Haraka. Looks like a DeFi program. Do you want to talk about that, or is there something else that you would want to talk about?
Yeah, actually, maybe two things that I think would be good to just kind of tie the loop on before we go into other stuff. But yeah, I think just on the stablecoin piece and something that I'd love to get your thoughts on this if you've been following this. But the whole privacy narrative that's been taking off in the last, I guess, call it maybe 2 months or so. I mean, not that price action is a great way to judge things, but obviously Zcash is doing extremely well. And it's something that we've been investing into for quite some time, and it's exciting to see it take off right now. The reason why we've found that like privacy preserving technology is extremely powerful is exactly what we were just talking about, right? And so like if I am receiving a stablecoin, that is safer than cash, in the sense that like my physical safety is there. But your digital safety is then exposed, right? So like anyone who is um, enterprising or conniving, they could probably spend a bit of time and just figure out where, if they found, let's say, the NGO's wallet, and then they could trace all the transactions, and then they could figure out who's receiving money when, um, on chain, and then eventually they could figure out like, okay, here's what this guy's balance is. Like if you were the shop owner or something, right? You could figure, okay, here's what this guy's balance is. Here's when he gets money. Like there's definitely there's breadcrumbs that are being left everywhere, and so um, something that we're actually really um, yeah, I guess investing in is how do we bring some like the privacy benefits of cash, but with the digital expediency and benefits of stablecoins or digital currencies. Um, so that's just an area where I think we're super keen to see take off. I think this is quite it's quite new, and so obviously it depends on like what is this going to look like in the future. Um, I think it's a bit unclear, right? But like since ZK proofs came out and actually worked a year and a half ago or whatever it was, it feels like now we've got this opportunity to do something quite powerful with privacy preserving tech.
Yeah, we could probably do an entire episode on this because I think it's very, very valuable. I will give a quick anecdote that when I first got into crypto back in 2017, I remember I shared crypto with a friend of mine, and he's a not high net worth individual, but he's a very wealthy individual. Like I don't know what our high net worth is, right? But the first thing he said to me was, "What about privacy?" And we started talking about Monero back in 2017. And from that day, he was like, "Oh, Monero or whatever's the most private chain is going to always be sought after by the wealthy." But I think it's interesting now that the conversation is like we're going from the wealthy down to maybe someone who just needs to receive their conditional cash transfer that comes in monthly, and they don't want to like the example in Guatemala. They don't want to stand in line because then they're basically just saying, "Come rob me. I'm about to have like a lot of cash," as opposed to they can be in their home and just receive it to their digital wallet. Privacy is only going to continue to ramp up. Like I see the conversation around privacy start to ramp up as I start to see the conversation around authoritarian governments. Right? A lot of times, people stateside. I'm going to give you the stateside, my stateside perspective. A lot of times, people stateside they don't think that like they think V for Vendetta is a fictional thing, right? But now that you're starting to see that in the United States, there's starting to be a lot more control around finances, and it could even be politically motivated, then I think the libertarian cohort, which was always like a huge base in the beginning of Bitcoin adoption and blockchain adoption and like, free cash on the internet, rah-rahing on the internet, now that they're starting to see that, okay, it's cool maybe if I'm a Republican and I'm like, oh yeah, we're gonna like maybe own the Democrats on this. But I think all people on partisan realize that anything that's on one side could swing to the other side depending upon who's in office. And so this goes back to like the very, very simple, conversation you and I could have ideologically about free speech. If I tell you you can't say something, then one day when you're ruling, you could tell me that I can't say something. And because we're getting into that and it's extrapolating philosophically like onto the internet, onto the blockchain, I think things like Zcash are going to continue to explode. And once again, you've said perfectly, price action has nothing to do with like whether things are going to be big in the future or not. It's not always the best indicator of adoption, but people have been saying Zcash is going to go to $10,000, right? And it's like 600, 700 now or something like that. Like it's still far away from that. So I do think the conversations around privacy are only going to continue. And one of the things I'm actually very bullish on is stablecoins on Bitcoin Lightning Network. I think that's going to increase privacy tenfold. And somebody who recently came on the pod was talking about that because of the way Lightning is set up. It's really end to end. Like you can't necessarily see it on chain, just the way that the transactions are kind of batched.
Hmm.
So yeah, I super bullish on that, and I think it's very, very important. And I think in the future, just like cash now, I have no idea, Ken, how much cash is underneath your mattress, right? It could be $2 million. I don't know. In the future, people will have their mattress wallet, is what I'm calling it, where Ken will have a set amount of money in euros and dollars and yen, and no one knows what it is because it's on a privacy chain. And then he'll have stuff that, like, the IRS or like the tax audit system, the TradFi system could see. So anyway, I do think it's a massive conversation that's only going to continue to grow as geopolitically the world continues to start to vote more right. So yeah.
Yeah, I completely hear you on that. And then the other one that I was just thinking about on the top, kind of integrating AI and crypto. I don't know how much time you've been spending on this sort of stuff, but seeing like like Cloudflare, which is the internet gateway, like they've introduced something called pay per crawl, and then Google has launched AP2, Coinbase launched X402, Stripe setting up their own internet payments protocol, and so just like this is the integration of like agentic AI, and then using stablecoins, presumably using stablecoins, at least in Coinbase's case, to have agents crawl through the internet and use that to shop on your behalf. So whether it's commerce or whether it's as an API call, so that you can scrape data or crawl information. There's a clear opportunity in terms of how those pieces play together, and setting up a new economy of sorts. And whether that will actually, or how that materializes in emerging markets, it's still super early to tell. That's probably something like maybe one of the more like for our AI for financial resilience call for proposals. This would be one of the more like out there use cases that I'd be looking for. But I am quite keen to see how the new internet payment protocol, like how that gets standardized, and then how that gets implemented in emerging markets.
Yeah, one of the things in emerging markets that I see a lot, where I think maybe that this could tie in, is just the super aggressive nature of credit. And we've talked a lot, you and I, about how like people don't even have access to credit. One of the first things we said on this episode was like, hey, I don't even have a credit history, right? So how could AI help to like create that so a bank may take me more seriously when it comes to credit? There's so much in Colombia. There's so much aggressive black market credit borrowing. We're talking like 9% weekly. And people who don't have any financial literacy and they need that money and they're desperate, they're going to go into that, right? And that is just crazy. 9% weekly, and that, compounding, my gosh. So one of the things I would like to see is, and then banks too. Some of the credit card rates in Colombia are just astronomical. Mortgage rates here are astronomical. So you can't buy a home. Like when you buy a home in Colombia, it's probably the same throughout the developing world and the emerging market world. But it's like you actually have to come with all the cash. If the house is worth $80,000, you have to bring all the cash because you're not going to finance through the bank because the bank's going to have like a 40% mortgage rate or something so ridiculous. It's like it's just going to eat you alive. So one of the things I would like to see with that new like protocol is just really like access to credit that takes into account other things. I just think the access to credit is huge. We, however, need to transition because I need to let you go. So before I'm going to let you go, hopefully I can steal a couple more minutes of your time. When it comes to using AI and crypto for financial inclusion, what is the noise, right? And then what is the signal?
I'd say it's mostly noise. In fact, I'd probably say it's like 99% noise right now, and that's actually why I think um, we need like a wide landscaping of the market through this call for proposals. We need to see, where is all the noise, and then where is that little signal popping out. So I think it remains to be seen. We were running the Agentic AI and Crypto Hackathon at Paris Blockchain Week in April this year, so about 6 months ago, and it was, I would say, all noise. I don't think there's anything that came through there that where we thought, okay, like this has like real value and this has legs. Um, and so I think with this current batch, it remains to be seen, like what exactly is the real signal here.
You're the first person to ever give that answer, and I love that. And I think that also just speaks to how nascent this entire thing is of like how do we use AI and crypto, these, to be fair, very nascent technologies in the in the history of humanity, to push humanity forward. So if you're watching this on YouTube, please subscribe. Listen to us on a podcast platform. Please subscribe. Follow us on socials at Future Signal XYZ. Ken, hopefully I'll get you on in 2026. A lot more things to continue to talk about. Thank you once again for hopping on the pod.
Yeah, thanks for having me. Take care.